Teresa Matich with the Investing News Network. Here with me today is Chris Berry of House Mountain Partners in the Disruptive Discoveries Journal. Chris, thank you for joining me.
Thanks for having me.
So you recently moderated a panel discussion at the Las Vegas Lithium Supply Conference. What were your takeaways from the panel?
Well, I thought it was interesting because it was an industry panel, and so you had industry pundits and you had several CEOs of lithium players that were, at different points of the development curve or the development stage. And so, the takeaways are, I think, number one, that everyone is sort of universally bullish, which could be a contrarian or a dangerous sign. But I think from talking to these gentlemen and also, the general consensus at the conference is that the demand story is real. Okay, whether or not we just focus on electric vehicles or energy storage, those are the real drivers of demand going forward. But, I think it's an interesting case of, whether or not supply will be able to keep pace with demand. It's a very tight market right now, and I think it will probably stay tight to 2020. That's what I was thinking going into the conference, and my thinking along that line was confirmed from the conference.
Yeah, a lot of people are bullish, but you also mentioned in your most recent note that there's a lack of consensus on the price. So what are your thoughts on where the price is headed for carbonate and hydroxide over the next 12 months?
Well, I think that, one of the challenges with lithium, obviously, is that there's no futures market. And so a lot of the price, whether or not we're talking about carbonate or hydroxide, is really done on a handshake basis. There is spot activity in countries like China, and that's what has everybody excited right now. You've got carbonate prices that are $20,000 to $25,000 a ton, hydroxide prices that are reportedly higher than that. I don't think that's sustainable. I think that's speculation in the market to a certain degree. How much of that, I'm not exactly sure, and to be honest with you, I don't think anybody is. To answer your question specifically, I think you'll probably see longer-term carbonate prices around the $10,000 a ton mark, and hydroxide prices perhaps slightly higher than that as well.
Okay, and of course you've spoken a lot about how cost of production is more important than price. So how does that play into investors looking at earlier stage plays?
Well, it makes it difficult because one of the things that I've said for a long time about lithium, and you could say the same thing about graphite or some of these other niche metals, is that price is not the most important factor. And so when you're trying to gauge the value of a company or the value of a deposit, looking at a carbonate price of $6,000 or $10,000 or $20,000 a ton really isn't what you should be focusing on. What you focus on is the potential cost of production. Again, I know I sound like a broken record, but lithium's an oligopoly. And so you have a few number of players or producers at the top, and so you look at what their cost of production is, for example, SQM down in Chile or FMC in Argentina, and then you go from there. And so any of these incumbent producers, despite the fact that the demand, I think, is very healthy going forward, any of the incumbent producers will need to meet or beat the existing producers on price, and that comes down to cost. Beat them on cost.
Yeah. Right, and you might not sound like a broken record because there's so much new interest and investment and money coming into the lithium sector right now. So what can investors look for really long-term plays?
Well, I think what you're asking, Teresa, is really the difference between an investment and a trade. And to be honest with you, a lot of the money, a lot of the companies that have come into the space in the last 2 or 3 months are probably trades, in the sense that we don't know a lot about the deposit. Again, price is sort of a wild card, and we know nothing about the costs. And so it's kind of a buyer beware thing. I personally think that there are a number of well-run, legitimate companies in the space with market caps of, say, at least 100 million US that are investments and are poised to add supply in the next 5 years. And so those are particularly interesting to me.
Okay, and what are the names of some of those companies?
Well, one is obviously Lithium Americas. I've been focused on them for a long time. They've been able to really, I think, separate themselves from the pack with the joint venture with SQM that they've just negotiated. So now they've got a great deposit. Again, it's a well-run company. And not only that, they have the technical expertise from SQM as well. So that's one that I think, will perform very, very well over the next couple of years.
Okay, thank you for joining me, Chris.
Thank you.
I'm Teresa Matich with the Investing News Network.